Stocks are crashing from a new oil crisis, but Bitcoin is doing the unthinkable. It's rallying. According to Crypto Jebb, this could be the first real sign of Bitcoin decoupling to become a true safe haven asset when geopolitical tensions rise. However, DataDash provides a stark warning, focusing on one critical level: $71,000. If Bitcoin fails to break through that resistance, he predicts a potential drop all the way down to $54,000. So is this a historic paradigm shift or just a bull trap before a major correction? Let's analyze the data.
In the latest video from Crypto Jebb channel, we're looking at a wild day in the markets where stocks took a nosedive while Bitcoin actually started to climb. This is pretty interesting because usually when the S&P 500 crashes, Bitcoin tends to follow it right down. The whole mess seems to be kicked off by the conflict involving Iran, the United States, and Israel, which has choked off the flow of oil from the Strait of Hormuz. This sent crude oil prices soaring, which in turn spooked the stock market. We saw the S&P 500 break some important support levels, but what's different this time is Bitcoin's reaction. It rallied, suggesting it might be starting to act as a safe place for money when there's geopolitical trouble, a bit like gold. The speaker thinks we're just seeing the early sparks of this behavior, and it might take another 10 or 15 years for it to fully mature. In the short term, a crashing stock market is probably still bad news for Bitcoin. However, the long-term picture looks incredibly bright. The speaker makes the point that buying Bitcoin at anything under $70,000 is a fantastic deal for the long haul, predicting it could be worth over $1 million per coin by 2036. So while the immediate future is shaky, the big picture suggests a massive opportunity. The video's central theme, Bitcoin beginning to act as a hedge against geopolitical instability, is a long-standing narrative in the crypto space. While the transcript points to a specific moment where Bitcoin rallied as stocks fell, the broader market dynamics are more complex. Recent data shows that Bitcoin's correlation with the S&P 500 has actually been increasing, especially since the approval of spot Bitcoin ETFs. This suggests that as more institutional capital enters the market, Bitcoin behaves more like a risk-on tech asset than a risk-off safe haven like gold. Current geopolitical tensions, such as the situation mentioned in Iran, often lead to a general risk-off mood in the markets, which has recently tended to pull Bitcoin down along with equities. Reports from early March 2026 indicate that broader crypto sentiment is improving on hopes that the conflict may de-escalate, causing a rally across major cryptocurrencies. The digital gold argument persists, and institutional interest is growing, with the view of Bitcoin as a hedge against currency debasement, but its performance during immediate market shocks still largely mirrors traditional risk assets.
In the latest video from DataDash, the discussion centers on the confusing signals in today's markets. We've got oil prices climbing and stocks looking a bit shaky, yet Bitcoin is actually pushing higher. The big question is what this all means for the rest of the year. For Bitcoin, the $71,000 mark is presented as the make or break point. If it can't decisively move above that level, the outlook suggests a possible drop, with a key target area between $54,000 and $57,000. There's a scenario where Bitcoin could dip below the recent lows to shake everyone out before staging a strong comeback. However, until Bitcoin reclaims the $96,000 area, any talk of new all-time highs is off the table. The video also touches on the S&P 500, suggesting a potential pullback to around the 6,200 level, possibly sparked by a correction in high-flying stocks like Nvidia. It's a complex picture, and the analysis suggests being ready for some big swings in either direction. The video's analysis of conflicting market signals is particularly timely. The divergence between rising oil, slipping equities, and a resilient Bitcoin captures the current uncertainty. Geopolitical tensions are clearly putting a floor under oil prices, with some reports indicating crude spiked to nearly $120 a barrel recently due to conflict in the Middle East. This complicates things for the Federal Reserve, as higher energy costs could keep inflation sticky, potentially averaging 3% in 2026, which is above the Fed's target. This environment makes risk assets like Bitcoin tricky to navigate. while spot Bitcoin ETFs just saw a renewal of inflows totaling around $167 million after a few days of withdrawals, the market sentiment remains cautious. The Crypto Fear and Greed Index has been hovering in extreme fear territory, suggesting investors are wary. The analysis on NVIDIA as a potential catalyst for a stock market correction is also sharp. While the company's growth has been immense, its high valuation makes it and the broader market sensitive to any shifts in the AI spending narrative.
After analyzing both perspectives, it's clear the market is sending some seriously mixed signals. Both analysts agree that geopolitical tension is pushing oil up and stocks down, yet Bitcoin is showing unusual strength in this environment. But the big disagreement is why. Is this the start of Bitcoin acting as a true safe haven, or just a temporary bounce before a major technical test? One view is long-term bullish, while the other warns of a sharp drop if key levels aren't broken. The unanswered question is whether this strength will last. The key takeaway, while the digital gold narrative is getting a boost, Bitcoin's short-term price is at a critical crossroads, demanding caution before conviction.